I've no idea where we are, where we're going. It doesn't feel like 2013 and it doesn't feel like 2017. I just don't know where we are. Where the hell are we, Willie?
Well, that's what I've been telling everybody. This is unique. This bull run 2020, 2021 we've never seen anything like it before. Structurally, it's completely different, right? So you can template all you like the price pattern from 2013. Oh, we're going to do a double pump, but the underlying investor activity is very, very different. And like, yeah, I mean, Bitcoin's maturing. It's getting very much larger players. We have institutions coming along. We've had a lot of speculators that are trading correlations, which we saw this last week as like this, for example, this last week, we've had nothing but buying by investors. They're buying on the exchanges, they're scooping it up, moving it off to cold storage, and you can look forensically at the blockchain and go, oh, okay, they're buying. And actually right now, which is really like not very common, is that you see the long-term investors. And when I say long-term, I mean, it's not really long-term. You don't know how long they'll hold those coins for, but these are the guys that keep accumulating. They buy, they seldom actually sell any of their coins. And then you've got these guys that are like what I call the swing traders, the medium-term guys that buy and sell. And those guys are buying as well. So everyone's buying right now. Meanwhile, the price is collapsing because you've got this new kind of speculative risk-off trading. People are like leverage trading and they're selling down. That's the only explanation for this price pullback, is that we had the Evergrande. How do you pronounce that? Evergrande? I just read.
I think it's Evergrande.
Evergrande. Okay, Evergrande scare. And also we had the Fed tapering kind of like notice. And you can see the S&P 500 starting to test support. And we went into this last weekend like that. And on the weekend trading, it started to look very weak and it sold off. And Bitcoin likewise started selling off. So it was just selling off on a correlation to the S&P 500, where nothing but spot buying. And so, that's one of the things that's interesting in this year, is that we've got different actors in the market, and they're all doing different things. And obviously, I look on chain, so I look at what medium long-term investors doing. To see what speculators doing, you really have to use derivatives data, and that's not quite as reliable. But yeah, so we've had this kind of mismatch, and I think a few people got very, very bearish, but there's really no cause to be super bearish. I think there's even a few people that are they still think we're in a bear market, but again, structurally on chain, what the real investors are doing is, we've never been in a bear market. Arguably, you might have been tipped into a bear market, but more like a little bit of a bear market within a greater macro setup. And so, yeah, that's the interesting thing. This cycle is not a cycle in my reckoning. This cycle is different. I'm like, it's not even a cycle. I don't think we're going to top, and we're going to have another 4-year sort of revolution where we have like a 1-year bear market. It's not looking like that at all.
I think that's healthy though, Willie.
Yeah, well, it was eventually going to happen, right? Eventually, the halvening will not be powerful enough, because, what is it? 1.6% inflation rate is what the miners are adding to the Bitcoin supply. Whether it's right now, whether it's 0.5% inflation rate, or is a 0.1% inflation rate, sooner or later, that's not going to mean anything. It's going to go to zero. At a certain point, it's going to break loose from the halvening cycle, and there's going to be other effects that impact it. And I think it's already happened. And even right now is like, the interesting thing is the mining has gotten so large and so like corporate that, you know, we're starting to see numerous like mining operations that are publicly traded. And those guys now, many of them aren't selling because they are really, you know, people investing in them for their Bitcoin. So they're not selling, they sell more equity to get more Bitcoin through their mining operations. So that sort of sell down's gone from some of the larger operators. So yeah, I think we're broken loose already. So it's like breaking, you know, I'm not, you know, there's a lot of people thinking, oh, wow, as the thing gets bigger and bigger and bigger, the cycles will lengthen. I'm not saying that either. I think that it's binary. We had this 4-year lock-in from the halvening. And then once we break free, then we're in correlations to macro, and macro cycle at around roughly 10 years. And I think because of that, this won't be a cycle. We're correlated to macro more than Bitcoin's internal halvening. So yeah, it's not like other cycles because A, we're not in a cycle, and B, underneath the structure of what the investors are doing is completely different than what we've ever seen before.
Well, I think breaking the cycle is actually bullish for Bitcoin. I would exchange a smaller top this year for not having a large drawdown that starts next year. I don't like the structure of a 4-year cycle. Look, if I knew it, understood it, could trade it, yeah, obviously it's great for gains. But if we want the market to mature and we want Bitcoin to be an asset that more people come in and use and don't fear the volatility, I would much rather have a more stable price than these 4-year cycles. So I think it's actually bullish for Bitcoin. And also, if the cycle is broken, there isn't going to be that big incentive for a massive sell-off come January, well, unless people have got to pay their taxes.
Yeah, I don't know. Because we've got other impacts, right? Like fourth quarter, you know, well, that's well into the zone where we're all expecting ETFs to start coming in America, and fourth quarter is where we expect much more institutional in terms of corporate treasuries coming in. So, you know, these kind of demand and supply things meet, and maybe the buying is going to overwhelm it. Certainly is setting up that way structurally on chain. But I agree, like, you know, it's good to not have those 80% pullbacks over a year, because it wreaks havoc on all of Bitcoin's metrics, volatility, Sharpe ratio, the risk undertaken, all that sort of stuff. It all just means that you can allocate more if the risk is less. So yeah, no, it's that's the great thing about this industry, is it keeps changing, and you know, everything we've learned in the past does not necessarily apply into the future. Particularly these kind of fractals that, you know, of cycles. I think it's not going to work. This shorter time frames maybe, but not the larger ones, because I think we're in a different era. Like, all the metrics are broken as well. Like on chain, all those metrics that I used to use a year or even 1 to 2 years ago, I don't even look at them now. I think they're just so archaic. They're like Stone Age tools compared to the stuff we need to look at today. That's advancing as well. So yeah, it's a whole new ball game right now with these markets. Bitcoin is money. So I'm a maximalist on Bitcoin as money. I think it's one. And people often think I'm a maximalist, but I'm not. I think that there will be a lot of interesting technology that's going to come out of the space. And this is one of the problems if you're in Bitcoin, if you start talking about stuff that's outside of Bitcoin, you're considered promoting scams, which I don't think is the case in 2021. 2017, a lot of it was scams, and there's a lot of Ponzi's, and still is now, but there's some really interesting technologies out there, and you know, the due diligence is fully available if you want to be the VC type. So, you know, let's face it, Bitcoin is not going to do a 10,000x from here. other than Bitcoin, fiat going to infinity in terms of money printing, it's not, in terms of real returns of things you can buy, maybe in a gold-based return, it's not going to do another 10,000x. We might get 100x, maybe 1,000x.